right now, we have a management on our show. Let's now focus on Piramal Pharma, which is surging today on the back of a strong Q4 earnings. Their revenue saw an 18% increase, while margins are also at multi-quarter high. Our colleague Ekta Batra spoke to Nandini Piramal, the chairperson of the company, on their Q4 performance and began by asking about innovation spending in FY25 and the biotech scenario in the US. Listen in.
Overall, at a PPL level, we're guiding for early teens growth in both revenue and EBITDA. As you mentioned rightly, the biotech funding has been difficult. And if that improves, which we hope at the end next, maybe second half, that will be an upside for us. We've also seen that our innovation-related business for the first time last year in FY24 crossed 50%. And our hope is that, and our intention is we should see that grow faster than the generic business.
Okay, all right. So the innovation piece is probably going to grow faster than the generic piece. That's interesting. I was going to get to your guidance a little later, but I'll address it now. Revenue and EBITDA growth to be in early teens. Besides CDMO, what are the other key growth drivers?
So our India consumer healthcare should be growing faster. And our CHG business will be slightly muted in terms of EBITDA growth. And the reason is we've got some certain regulatory and tech transfer spend that will have to happen this year so that we can see good medium-term growth.
Okay. So when you said biotech funding, if in case that scenario improves, what is the upside to the guidance that we could probably expect?
I think we'll have to wait and see. Right now, I would honestly say while biotech funding has improved in the first 3-4 months of the year, it's still too early to be a trend. And I think we'll know more at the second half.
Would it still be in the teens, or do you think that it can push up growth to say even the early 20s?
No, I think we'll keep to the teens.
Okay, we'll keep to the teens. The other key point which stood out this quarter were the margins, which have improved to a multi-quarter high of around 20-odd%. What is the guidance for FY25, considering that there are these non-reoccurring expenditures that you have alluded to in the complex hospitals generics business, as well as expenses for medium-term growth?
So we have improved EBITDA, as we've seen over the year and over the quarter. The reason is it is a fixed cost business, so higher revenue actually translates to better operating margins, as well as we've been paying a lot of attention onto cost optimization and operational excellence. So each of these, I think, has helped contribute. For over the next year, we're saying we're going to keep to an early teens growth in EBITDA for over the full year.
What would margins be? A range?
I think we'll say about, pretty much about the same or maybe a little bit better.
Okay. And your eventual margin guidance is 23 to 24%. When do you envisage that to take place by?
I think in the 3 to 5 year time frame.
Okay, so not in the near term at least.
No.
All right. What are the opportunities in the antibody drug conjugate space that you are seeing?
So this is, I think, a very exciting space, and we've actually been one of the few players that have been doing conjugation for a long time. We've been in the business, and so across the board, we've actually done a lot of work in development and commercialization. Last year, we actually opened our expansion to do more commercial scale. And what we've seen is over the last year, people used to, go to separate places for commercial as well as antibody or the payload. Now people are looking at integrated offerings. So last year, actually, we had our first order that actually combined all 3 steps, the MAB, the payload, as well as the conjugation and the fill finish. And we think that's a trend that will continue, and we are well positioned to meet that trend.
Okay. You seem to be cautious on the complex hospital generic space. While there could be costs, there was also some amount of pricing pressure. I do understand that one of your key products, there was a price cut which took place. What was the extent of the price cut? Do you expect this price competition to continue?
So in a generics market, there will be price pressure always. But the benefit in the complex hospital generics is you have multiple year contracts, and because we sell in 100 countries across the world, kind of these contracts will keep renewing. So there was some price pressure. We expect some of it to continue. I think that's part of the name of the game, but we'll continue to add new products. We have a bunch of products that are under development. And so between that and our cost optimization and margin enhancement, because we're vertically integrated in the inhalation anesthesia, we should see benefit. We should be able to maintain margins at least.
Well, just, focusing on the debt as well, because the company's guidance includes a further improvement in debt ratios. You've improved it to around, I think, around 2.9 times. Total debt is down to around 3,932 crores. Where does it go from here in FY25?
See, as we said, we'll see an absolute improvement in EBITDA, in the numbers, and we will repay some debt, and we'll actually look at reducing it further. I don't have an exact number for you, but the direction is a reduction of net debt to EBITDA.
Quickly then, Nandini, before we let you go, just wanted your thoughts on the BioSecure Act in the US. It is expected to be beneficial for India and especially for companies such as Piramal Pharma. What is the impact? How much do you expect it to be beneficial to you? Are you seeing queries come through already on account of it?
So the BioSecure Act, as your viewers know, hasn't yet been kind of made into law. And if it does get made into law, I think it will depend on what is actually part of the wording and how much of a transition period that they give for people to move products. But I do think some customers are looking at changing, so especially for new products. So we are seeing an uptick in RFPs.
Okay, so you are seeing some incremental queries come through.
Yes.
Do you expect it to turn into a tangible opportunity for Indian pharma in FY25, FY26?
Sometimes these things take a long time between sort of query to actually revenue. So I think we'll have to wait and see.
Right, guiding for early teen revenue growth as well as EBITDA. That's the management of Piramal Pharma. The stock doing extremely well, up 5% in an otherwise wobbly market. Now as we speak, the Nifty is down about 100 points, a fair distance from where we were at the high point of trade, and the mid caps have it worse as well.